All right, everybody, we're back again with another episode of Big Talk About Small Business. And I'm here today with my two friends, Theresa Dilatush and Mika McFadden. And we're going to talk about a lot of stuff, as we usually do, but we're going to talk about insurance and some tools that these guys have that can help small businesses with their working capital needs. And so we're going to get into that in a minute, but don't have my co-host with me today, Eric Howerton. He's off on another one of his adventures. And we are also breaking in a brand new studio today. So this is the first time we've ever done anything here, guys. You can tell it's Eric's taste, though. He always says everything is like black and chrome, and every room in this place is black. So it sort of reflects everything he does. He drives a black truck. He's got a black motorcycle, and he loves black. But anyway, so Theresa, why don't you tell us a little bit about yourself? Where'd you grow up, and how'd you get into this business?
Well, my family goes back 7 generations in Northwest Arkansas.
Wow.
Yeah, my 6th great-grandfather was Simon Sager, who founded the town of Siloam Springs.
No kidding.
Yeah.
That's cool.
And so I grew up in Siloam Springs. And I married a boy from Mississippi. That's how I got the last name Dilatush. Married him 34 years ago next month.
Okay.
5 beautiful children.
Wow.
All grown. 1 grandson. He calls me Gigi. He can have whatever he wants. And I did a crazy thing in 2005. I started a business, New Course Financial, because I had read Nelson Nash's book.
Okay.
And it was called Becoming Your Own Banker.
All right.
And it was this way to finance your entire life or your business using cash value life insurance. You know, the big boogeyman that everyone tells you is too expensive and you shouldn't get. But that book economically makes so much sense.
Uh-huh.
And I couldn't find anyone to help me, so I called Mr. Nash, the author, and I said, will you help me find someone? And he goes, well, I've just found her. He goes, love, you need to go get your life insurance license and become the expert. And he was a fantastic mentor to me. Fast forward years later, I helped different agencies and brokerages. I taught their agents how to properly structure cash value life insurance so that it could be used like a private bank. My parents were small business owners, and so my dad financed his entire business with his cash value policy. And I was looking for a business partner and couldn't find anyone but a hooligan.
And that's how you end up with Mika?
No, fast forward to, what was it? 2019, this guy walks through the door because we have a little guest house and his sister was going to live there for a while. And we hit it off, and I realized that's my business partner.
Oh, it's funny how those things work, isn't it?
Yeah. No coincidence.
No. You know, I got 5 daughters myself and 1 grandson. But so I'm in a similar mode, except I've got a range from 12 to 36 in my kids.
Oh, my goodness.
It's a pretty big spread there. What did you do before you got into this insurance business?
I was a full-time stay-at-home homeschooling mom.
Really?
Like, my days were full.
Wow.
Yeah.
Okay. And this just was such a passion for you. You were so into it that it just made you start a business.
Well, I was always an avid reader.
Okay.
And I was the kid in junior high and high school that while everybody else was out, doing something or listening to records in their bedroom, my dad and I were watching ABC World News Tonight. I was reading, reading all of his books by Napoleon Hill. So
Think and Grow Rich. My dad bought that for everybody in our family.
No, I was a total geek when it comes to all things, economic. So.
Wow, that's great, though. All that reading. See, you can learn anything if you're willing to read. Anything.
The first thing I taught our children was how to read. Because I knew they could read, they could learn, and I turned out 5 college graduates. So
good for you. I used to own with my first wife, we had a reading clinic, and it was a method that she developed. And that's what she always said, was that, a lot of times kids are struggling in math or science. It really is because they can't read. So therefore, they can't do the problems and all. And so the reading is the basis of everything, but it really is critical. But unfortunately, it seems like today, very few people actually read anything that takes longer than about 30 seconds.
There's a lot of this going on.
Yes. In the old days, we called that the BlackBerry prayer. It was like, But no, it's really true. But Micah, now tell us a little bit about yourself.
Yeah, so married 23 years now, 3 children, sophomore in college, junior in high school, and 7th grader, 13-year-old. Got started in the business in 98 after college, got my securities license and what I was called a traditional financial advisor. And as I went through the realm of that, I went out and I had a person that I met that was kind of a mentor that was like, Micah, you can go talk to an individual and get one yes, or you can leverage your time and go talk to business owners and get access to talk to 20, 50, 100 employees. And so I got into the 401k realm. And as I went through that, as I went out and contacted and tried to talk to business owners, the first question everybody asked is, the retirement plan's great, but can you help me on my health insurance?
Right.
That's what was the big concern.
Sure.
In the early 2000s.
Well, prices kept going up, and one strategy a lot of small businesses used was just change every year. Get the new company to buy your business, and then the next year the rates are going to go up, so go find somebody else. It seemed like a lot of businesses did that, but it's painful for the employees.
Yes.
Really is. They hate it.
Yes. And it puts the business owner in a bad situation of you can have a good year claims-wise.
Right.
And as a broker and insurance agent, you come in and, hey, by the way, Mark, you're going to get a 3, 5, 7% rate increase, even though nobody did anything wrong because you're pooled.
Yep.
And so I got into that side. I didn't do the health insurance very long because I hated bringing bad news to groups every year.
I believe it. Yeah.
So I transitioned into more of the supplemental benefits and more into the enrollment services. I saw that there was a real need for education for the employees because as we went in and we talked to groups and talked to an employee, I was like, you can tell me a little bit about your insurance and then we'll kind of start from here, what's going to be new or what the changes taking place.
Sure.
Most people didn't know what they had. They might know their deductible, they might know their copay, maybe the maximum out of pocket, maybe a prescription copay, but that was really all they knew about their medical insurance. And so it kind of transitioned to that into the dental, vision, disability, cancer, all those types of things. And did that very successfully, had a great run with that. And that marketplace, though, I partnered with a lot of health insurance brokers. I let them handle the headache and the nightmare of the health insurance.
Sure.
We came in and helped communicate the changes that they had to deliver.
Right.
So we were kind of the messenger, not the bad guy, if that makes sense, moving forward. And so got a lot of experience in visiting with business owners and understanding their needs, the employees' needs, everything.
Yep.
And then I'm going to look
Theresa.
at this guest house for Theresa, for my sister, Theresa's. We hit it off. And she starts, what do you do? What do you do? And she starts telling me about all these things. And I'm like, okay, at that point, I had been about 20 years in the business, and nobody had ever in the financial services realm, the employee benefit realm, the life insurance realm, I'd never heard all the things that she had talked about. And so we immediately hit off. The marketplace I was in, there was more and more competition in the supplemental insurance world and the enrollment services.
Right.
And the broker marketplace went from, I used to have 108 different insurance agents across about a 300-mile radius that I chased that did health insurance, was down to about 11.
Wow. I didn't realize there was such a consolidation in that business.
They were either run out of the business or pushed out. Carriers forced X number of lives to keep contracts. And so many merged or joined in or were bought out and became these big conglomerates. So it's that, it kind of goes back to that buying power on that. So and
hard to distinguish yourself then if you have all that competition out there, right?
Right. And so I was really looking for a change, and it was like, okay, here's Theresa, and I was just intrigued because it was so different and not really against, but just really different from anything I had been taught that first 19, 20 years.
Wow. So why don't you guys tell us a little bit about exactly what you do for your clients and how it works and helps them?
Oh my goodness. Well, just knowing what my parents' small business experience was, they were always looking for someone to say, well, who do I use for this? Who do I use for this? And so we don't want to be the jack of all trades,
Right.
but we just try and bring multiple strategies to the table for our clients that aren't in the traditional box of all things financial planning. People have forgotten that cash value life insurance was the first guy to show up. Term is a relatively new concept. It has a great fit for a lot of people.
It's not so great when you get to be my age. It gets really expensive.
I know. So this is why we're trying to preach to the younger crowd.
I know. Do it early.
Put something in place.
Yes.
But it is a tier 1 asset out of 5 asset classes. And so if you go to the bank.
What does that mean?
Well, there are 5 classes of assets. The first is cash equivalencies, and cash value life insurance.
So it's liquid, basically.
It's
super liquid.
That's why the bank will always ask you on a loan form,
Right.
Do you have cash value life insurance?
Sure.
But people don't understand how easy it is to properly structure a policy so that you have a high early cash value in that policy. How easy the process is. You sign a form, get a loan from your policy. It's actually a loan from the carrier with your death benefit as the guarantee for that.
Can you borrow more than the cash value?
Nope.
Okay.
No, so there's no overloan danger. But no one understands, too, that the insured, the owner of that contract, is the owner of that contract, and the life insurance carrier is the administrator.
Right.
And
so you're borrowing from yourself is all it is.
From yourself and paying yourself back. Now, if you're a business owner, it gets even better because I'm no CPA. I'll just say that right now.
Okay.
But I do know there is a bit of a tax reduction strategy because you can write off interest, right?
Right.
So
we don't provide legal and accounting advice, but no, I understand. So interest is tax deductible, however.
Right. And so for a small business owner or a medium, I don't care how big your business is or how small it is. It's just, it shouldn't be the only thing you do. It should just be one more tool in your portfolio to help you create 2 jobs for every dollar so that you're always getting rate of return constantly.
So what if I don't have whole life insurance? I'm a business owner. I don't have any insurance I can go borrow against. Do you all sell them that?
Yeah, so I think there's a couple key things. You kind of mentioned whole life in particular.
Okay. And there's universal life, obviously, now,
yeah, and
which is sort of a variant.
Yeah, we really kind of specify in indexed universal life particularly, and whole life.
Okay.
We kind of compare those to the tortoise and the hare.
All right.
With whole life, it is slow and steady, wins the race. We know returns 12 months in advance. We can do a lot of planning on that. Index universal life is more like the hare in that your money is not actually invested in the market. It is mirroring the index market. So if your money is in the market, you experience the highs and the lows, the ups and the downs.
Right.
Within indexed universal life, you're mirroring the market with options. When the market goes up, you capture and get rewarded those gains. When the market goes down, you have a zero floor, so your principal's always safe.
Okay.
But we like to capture, like the hare, we like to get those big gains or those big speed swings on that so that we can increase the opportunity for those cash value growth to take place. So
there's we're not all experts in insurance. Absolutely. I mean, and certainly I don't consider myself one. I guess my understanding with the universal life, whether it's indexed or not, is typically you kind of front end load those things, right? You pay more up front, and then over time you don't have to necessarily even pay premiums on them, or the premiums may go down. Is that correct? Or is that a good assessment or no? Whereas whole life, I know it's level typically, right?
Well, you can just going to use your term front end load, both whole life and indexed universal life.
Okay.
And Nelson Nash always used to say, his thing was, why do people want to quit paying premiums? Because you're just depositing money in your bank that's getting a rate of return, and it's still going to get a rate of return when you pull it out and go use it for something else or to acquire an asset.
Mm-hmm.
So you can make an end game where no more premiums are required. We've had 3 or 4 clients in the last few months decide to no longer pay premiums. Those cash values will still continue to grow. There is some flexibility with both types of those policies to where, okay, so 2008, 9, and 10, none of my clients lost their business or their home. And just talked with a client this past weekend, and he abruptly got fired from a job, a very cush job that he had. And
so I always tell people, having a job is risky.
right.
You know, you can get fired due to no fault of your own. Just
And
get up one day.
I mean, this guy is solid. He was a great guy, but he had a great amount of cash value. He said, we didn't lose sleep at night, and it allowed me, to pay our expenses so that I didn't have to take a job. I could choose to take a job.
Sure.
So
How do you guys make money? Because if I have a whole life policy, I can go borrow against that myself. I don't need you to do that for me. What is it exactly you all do to help these people?
we have to be licensed.
Okay.
You have to have continuing education.
Mm-hmm.
And so the carriers compensate us.
I see.
Yeah. So our clients don't pay us.
Okay.
I think one of the most important things on life insurance policies, particularly cash value life insurance, is if it's structured properly.
Mm-hmm.
Those are the 2 most important words I can think of if somebody asked me, why would I do permanent life insurance, particularly with you all, with what you're telling us to do. The policy has to be structured properly. There are a lot of agents out here that do a good job, but if they may sell a permanent life insurance policy to try to acquire as much death benefit. If you came to me and you said, what can I get for $10,000 a year in premium versus putting this into a term policy on here, we might be able to, just for example, get you a $2 million death benefit.
Mm-hmm.
When we go to structure policies, most of the time, if someone's looking for cash value accumulation or retirement benefits down the road, and we can talk a little bit about that in the future, they want to, or we want to structure that to solve for the minimum death benefit, but the maximum accumulation.
I got it.
That's going to make the biggest difference in the world on what that's going to look like.
Well, you're basically using less of their money to go buy insurance, in effect, and more is just invested.
Absolutely.
So what kind of returns do people get on these policies? Just out of curiosity, what would be like a typical? I'm sure it changes based on the economy and the stock market and inflation and everything else, but interest rates, what's typical right now?
Yeah, I would say that, I mean, we see like whole life typically kind of steadies around
5%.
Yeah, 4.5% to 6%, something around in there. Index universal life has a lot of different variants in that sometimes carriers, to have that zero floor where your principal can never go down,
Right.
they give you a cap. So it may cap out at 12.5%, for example.
Okay.
We like to do a mixture or a blend if we're doing indexed universal life, to where we may have some uncapped indexes.
I say.
We may have some capped indexes, so that if the markets do rebound and we see a 25, 30% increase, we can capture part of
It's
that.
like a portfolio, an investment portfolio within this insurance policy, basically.
And that's the biggest
Sort of a balanced portfolio.
Mhm. It is.
Yeah.
And 2 things with that you just say with that particular term. Cash value life insurance is an insurance product, not an investment tool.
Right.
And that is the biggest difference on that, is that we don't have clients in market risk where they can lose money. Therefore, it's not really an investment. It's an insurance product.
Mm-hmm.
It allows them as well to have access to one of the best assets out here. In my opinion, it's the top asset you can get, because it checks liquidity, safety, low cost, good rate of return, and it's tax efficient.
Right.
Dive into as much of those as we want to as we talk to these individuals,
Uh-huh.
particularly these business owners, because I see so much as a small business owner, having been in the 401k realm and in the employee benefit world realm. Small business owners have to wear all these different hats.
Right. And we're not good at all of them.
Right.
Let's face it. I always found, you got to get the specialists in whatever it is you need. Don't fool around with the generalists.
Right.
Whether that's lawyers, insurance brokers, all of them. Okay. Yeah. So,
Well, and I didn't just wake up one day and go, hey, I want to be a life insurance agent.
Right.
I actually kind of fought and struggled with that whole idea. But my husband's a great guy, and he's like, you know what, you got this, you go do it. And he really helped me get my business started. But I did understand why you would want to have cash value life insurance and multiple policies in your portfolio. Whether you are paying for weddings. We have 4 daughters, paid for a lot of weddings and prom dresses, taking policy loans, braces. All of my kids had braces. And
I got 2 of them in it right now. 3.
So
3. What am I saying? 3 in it. One of them's my wife. She decided to go get the Invisalign.
Yes, I believe there is a local orthodontist here that I personally probably sent his children to college. I won't mention.
I may know who it is. It's probably a friend of mine, if it's who I think it is. But so obviously, though, you had a mind for the math.
Yes.
I mean, and just I'm sure that's been a big part of this for you, is understanding that. But then the risk, too, I think is, that's obviously something that you understood to get into this. I wish I had, if I could go back 25 years, I would have done more universal life policies than term, because they were great for, as you said, I'm sitting there paying $800 a month or a year for $500,000 or whatever. And then one day you wake up and you get a bill for $9,200, which I just got this morning. Yeah. So it's well timed on a term policy,
Well, and here's the thing
as my age hit that.
Here's the thing that we hear all the time. We always hear, why didn't someone teach me this 20 years ago? And then with the younger crowd, the folks in their 20s and 30s and even some 40-year-olds, they think they're going to live forever. And
right.
We found out you're not guaranteed that.
Right, yeah.
Micah had a health event, and it was right after we had decided to form a partnership. And that day scared me to death.
Sure.
So I'm thinking, I finally found him, and help. What's going to happen? So,
listen, accidents. I lost a friend of mine who was an insurance broker about a year and a half ago. He was 40. And then I lost another friend of mine who was 31 years old in a car accident here recently, entrepreneur. Yep. So it does happen. Yeah. Bad stuff happens. But this whole idea, so let's go back to, I'm a small business owner, okay? Let's just say I've got a business, I'm doing $10 million a year in revenue. I make $1 million a year for all practical purposes. I've got all kinds of term life. My bank wants me to have it. I probably got $2 or $3 million worth of term life out there. I got my 401k, whatever variant on that, retirement fund. I got maybe a stock portfolio that's got some stuff in it, right? Maybe I got a little cash, but truthfully, most of my money is sitting in that business, all right? It's hard for me to justify investing in the public market when I know my own company generates a 30 or 40% return on invested capital year after year. So I call one of you up. How do you help me?
I think the first thing is to try to get a good picture of the situation. And you just kind of laid out some examples, is to find out what all they're doing, what their plans are. Do they have an exit strategy? Are they going to try to pass this business on to a family member? So a lot of analysis on the front. It's kind of like I use the analogy of going to the doctor. If you say you have a headache, I can give you a Tylenol and send you on down the road.
But we don't know what's causing the headache, right?
Right.
Yeah.
But we don't want to go to the extreme of, okay, well, Mark, let's come in here in 2 days. We're going to cut you open and look in the brain and see if there's something else going on. We try to find that happy medium between, if that makes sense. But within that, there are so many things that I've seen with small business owners, particularly on this, is a lot of times I feel like they're maybe kind of neglected.
Right.
Not going to say any names again, but I had a lot of the brokers that I worked with that only targeted groups with 100+ employees.
Yeah, I don't want to mess with them.
Financial sense.
Yes, I believe that entirely.
Right. And
I've seen so many businesses that serve business that have that attitude of, we only want to deal with somebody if they're at a certain threshold.
Right.
And then that lesser group is underserved.
Right.
Yeah, I believe that.
So we do an analysis. We see a lot that these business owners have put everything into the business. They may not even have some of the things you just mentioned. They may have that term policy.
Yeah, if I'm 40 years old, I probably don't have anything other than the business, right? It's maybe the 60-year-olds are in a little better shape, but yeah.
They've neglected retirement for themselves.
Right.
They might have put something in place for the employees as a retention tool because they want to try to keep them. A lot of times they don't even do that because there's so much administration, so many regulations. If you do this for one, you have to do it for all.
Right.
So we really kind of look at, are there things that you could do? You may be doing good. Are there things we could do better on there? And so we look at. From the cash value life insurance side, it checks a lot of boxes for them in that it gives them that permanent life insurance. We talked about a moment ago that, you've got this bill as you get older that it's larger now.
I mean, it goes up way higher than people think. It's not like it went up a little bit. It just went up tenfold overnight.
So what do most people do? They let it go.
Right.
There. Or they cut the death benefit down so low that it helps lower that cost.
Yeah.
97% of term policies are not used.
I've done both of those things myself at various times.
Yeah.
Both.
Yeah.
So
it checks the box of providing them death benefit.
Right.
It can give them tax advantaged income in their retirement years because during their working years, they have a lot of these different deductions that they can qualify for. They may not have looked at, okay, I make $100,000 a year. If I put $15,000 in a tax deferred retirement program, I'm going to get $15,000 off of my gross income this year.
Sure. So
some of them do it, some don't, because it's in this conglomerate of all these other deductions that they take on here.
Yeah.
So this gives them an avenue to have tax-free retirement when they retire. It also gives them, as Theresa mentioned, and her father used this, a liquid fund that they can go pull money out of and use to grow their business. And this is probably the biggest thing with cash value life insurance most people don't realize. If you have $100,000 in cash value sitting there, when you pull $50,000 out, you're not pulling $50,000 out like you would out of a money market or an IRA.
Yeah, because the return stops on the 50 I take out of the retirement fund.
So,
plus I pay a penalty.
Absolutely.
Yeah, and I pay taxes on it.
Absolutely.
Yeah. So
from cash value life insurance, when you pull 50 out, the insurance company is actually loaning you $50,000.
I see.
You're getting to collateralize against the money that you have in there.
Right.
So now you can make money on your business, real estate, like with you or anything else. If the markets go up 10%, you still get credit in that example for the full 100,000 sitting there, even though 50 is out doing something else.
I see.
You can do small numbers, big numbers with that, whatever.
I can see why people are, I'm sorry, I didn't mean to interrupt you. I can see why people get confused about this, though. You have to really show the effect, and the tax aspect of it is really critical. And where you end up with the pot of money that you can use, I can see that makes a lot of sense. So, let's just say $100,000. For the sake of this example, let's pretend I'm a 45-year-old non-smoker, reasonably good health. Maybe my cholesterol's too high or whatever. So how long is it going to take somebody like me to get to where I got this $100,000 sitting out there that I can pull from, typically? And what would that cost me to get there? I know it varies, right?
It does, because a part of our job is to look at your your overall financial snapshot and determine, can we take inefficient money and move it from this side to that side and make it now highly efficient money? So we can make recommendations on, well, you've got money sitting in a money market earning
Nothing.
2%, when we know we're getting 4.5 to 6 in a whole life, or who knows what in an IUL, depending on what indice we've chose. And so it's just, we try and help the client find the money so that they're not having to come up with extra dollars. We're just redirecting. And so I'm just going to use one of our clients as an example. He's a 41-year-old guy. He doesn't own his own business, but he makes good money as an engineer. And he was a client of mine before I even met Micah, because he had whole life policies.
Okay.
He was referred by another client. And so we were talking, and I showed him, he had an extra, I think he did one lump sum of $25,000 and then $10,000 a year.
Okay.
And I told him, I said, if you do this will help you fund real estate purchases for investments,
Sure.
or, buy equipment for your farm or whatever. He said, that will not work. That will not work. What are you talking about? He's a spreadsheet guy.
Right. It's an engineer.
Yes.
Black and white. It's logical.
Tear it apart and build it back 3 times to prove to you that now he understands this. He called me 3 days later and he goes, we need to talk. So he started with that first policy. He got another whole life policy. He comes back to us, was it last year? And so he's added indexed universal life into his portfolio, because when he started running the numbers, he realized if he put, a good sum in there, that he could retire 8 years earlier.
Wow.
Yeah. And run his farm and go hunting and do the things he loves.
So that's a great success story then.
We have so many clients who are great success stories. And so I'm 10 years older than Micah. I want to finish well. I want people to say, when they come to my end of life celebration, that
you really helped them.
She really did something great for my family.
Sure.
And my kids and grandkids are going to have generational wealth that we otherwise wouldn't have had. That's the story I want.
Yeah. Yeah, that makes a lot of sense. Seems to me like, again, I've worked with small businesses basically my entire career, 44 years, some of them larger than others, and been involved in every aspect of it. I find one of the biggest problems with these small businesses is they don't have the cash flow they should have, because they do a really lousy job with their billing and collection, just needlessly. Like they finish a job on the 7th of the month, but they send their bills out after the 1st of the following month, and maybe that waits 10 days before they go. They just lost use of all that money, and they basically need more working capital in the business than they should need. And that would free up some funds maybe to do some of this other stuff. I mean, do you guys ever get into that level of assistance with these clients to really understand like the capital needs of their business?
Yeah, we actually had a conversation yesterday with a charitable organization out of Georgia, and they're looking for some guidance and some structure. They've done well. They have some revenue. They're like, okay, we know. This was a referral from one of Theresa's other clients, and said, she said to talk to you. What can we be doing? What can we do better, or what can we change? And so we did kind of an analysis and a discovery call yesterday. We're working on putting some things together. They're working on putting some more numbers together, like what you're saying, the finances and the analytics of how this business is working, and we will structure for them a start.
Okay.
We've talked about $10,000 and $100,000 and all this. We have a lot of clients that put $150, $250 a month in. That's what they can afford. We've looked at their finances, and they get a start. We have one particular client that did that right when I first met Theresa, and then they've come back now, and there's some cash value built up there. Let's look at what else we can do, and their business has grown. So now they have some more funds they can put into this. They understand the momentum that has started within these cash value policies, and now they want to figure out what else they can do. They may look at, we've talked about moving money from the right pocket to the left pocket. Most people, when we start talking about life insurance, is, well, I don't have any extra money I can do.
Money flowing out of both pockets. Yeah.
But there's boat payments and hunting clubs, and there's, whatever the case may be on here, a country club membership. There's money. The stopping and buying coffee every morning.
Oh, yeah. People waste.
That adds up on.
I take my kids through Starbucks, and it costs us $20 in the morning. It's insane.
Yes.
Crazy.
Absolutely insane for two of them. I'm like, this is crazy. So, but let's go back to getting the money out of these policies. So I know you just make a phone call or you check the box online or whatever, and you got your account set up in there or however it works, and they wire it to you or whatever the deal is. But do you have to pay that money back? Or is that a withdrawal? How does that work?
You don't have to.
Okay.
You'll get an interest statement and a policy loan statement from your carrier.
Okay.
But we encourage you to, because if you're paying yourself back, especially if it's for a business expense, you want to pay yourself back. You want to pay yourself interest. And most carriers typically charge around a 5 to 6% interest rate, depending on what kind of policy it is and what policy year it is. There's very little volatility in what they
Right
charge.
now, that's a great rate, obviously.
It is.
You can't borrow money at that. If you want to get a commercial building loan, it's 8.75 if you got really good credit.
So I always have encouraged clients, yes, you own this. Yes, it's your money, but pay it back.
Okay.
Because money in motion is money that's not stagnant. So pay it back and wait for the next thing, and go buy the next property. We have a lot of real estate investors. They're clients, and they've all either paid down payments or purchased properties out of their cash value.
Remodels, all those types of things.
But if you're a tiny small startup, and you want to do this, you're 30-year-old with a great idea, but we really just don't have the funds. We're going to get you a very inexpensive term policy with one of the carriers that we know has a great permanent policy that you can
Conversion, yes.
without any more, pricks or prods or
right. Yeah, I'm sure that's a big concern for people because the older you get, the more likely you are to have problems that will disqualify you from being able to get more insurance later. So that conversion is great.
We also have a lot of carriers that do rapid or express underwriting. I've noticed there are a lot of gentlemen who are afraid of needles.
Yeah.
We have several clients that just don't want to get poked.
That never bothered me that much. I had one of my daughters was a phlebotomist at one point, but she's not doing that now. I never let her practice on me.
Mark, I would say as well to continue on the question that you asked about how do we get money out of these? I really say there's a smart way, a not so smart way, and a sad way to get money out of a cash value life insurance policy.
Okay.
The smart way is policy loans.
Right.
If we go borrow money from a credit union, from a bank, from a financial institution, from a private lender, whatever the case on this, we're going to pay that back. We're going to structure a payment schedule on there, kind of a promissory note. Policy loans are tax-free.
Right.
There. We pay them back. We're increasing the cash value of our policy. If we have something out and we borrow, 50 of the 100,000, and then we unexpectedly have an event like your friend or our friends, or could have been me, that we pass or they pass, then that loan comes off the death benefit. The not smart way of pulling money out on this,
cash it in entirely,
is could be, or with even just withdrawals.
Okay.
The money you've put in is after tax, so that's a cost basis, but any growth that has taken place is taxable. So if we take withdrawals, we're also, just like we would pull it out of a money market account, it's no longer there working for us.
right?
And then the sad way is we meet our demise, and then that money goes to a beneficiary, but we don't get anything out of it. So I wanted to kind of clarify or answer on your question.
Okay.
Those are the ways that we pull money out of a policy.
So let's just say I took $100,000 cash out of one of these index universal life policies that I built up over however many years I had it. And I'm planning on paying it back. But do I get like a payment schedule? What if I can't afford it? What if disaster strikes the business and I'm supposed to be paying them $1,000 a month or whatever, and I can't afford it now?
So
what happens then?
For the loan, I guess kind of two parts to this.
This is a loan.
Paying the loan back or paying the premiums for the policy. So on the paying the loans back on here, you don't have to pay those. Those can continue to accrue.
So I could just sit there and not pay that month and then go back to paying after that if I wanted to? Okay.
So let's do an example. Let's say that with your money that you've paid in over the years, you have $1 million death benefit.
Right.
You've borrowed $100,000 out.
Yeah.
They know if you pass, your $100,000's coming off the $1 million that would go to your beneficiary. You still have another $900,000 that's there.
Right. I understand that. Yeah.
So that kind of answers the side on the loan. The premium is important too, because we talk about flexibility of premiums in these cash value life insurance policies. You have, without getting too technical, you have a cap. There's really two limitations to life insurance. Can you qualify medically, and how much can you put in before it becomes a modified endowment contract or the whole thing becomes taxable? We try to get our clients right up to that.
Right. That's the smart, yeah.
Yeah, tax consequences of tax efficiency on here.
Mm-hmm.
Well, if we're paying $10,000 a year in annual premium for $1 million death benefit, the premium for that $1 million may be $2,500. The other $7,500's cash value.
Yes, I understand that.
As a business owner, we run into or we face challenges. We may not have the $10,000 one year in a down year. Well, as long as we pay that $2,500, we keep the policy in force.
I see. Okay.
Any year moving forward, we haven't paid the full $10,000. We can make up that difference. So the next year we could put $17,500 into the policy. So you have a lot of flexibility with the premiums.
Yeah, just like today, I told you, I actually got 2 insurance bills. One of them is on a universal life policy. And I thought that I put enough money in there when I got it that I wouldn't have to put anything in there, okay? Because I only got it last year. So I wrote a pretty big check initially, all right? So now I don't know, because I just bought another house. We haven't put our house in the market, and we have to do a rehab of the new one, and then we're going to sell. So we're going to be facing some big outflow right now. And I thought to myself, gee, do I have to pay all this right now? I don't know. I just sent a note to my insurance broker to find out the answer to that.
I think an important aspect of that goes back to, I mentioned earlier, 2 key words: properly structured cash value life insurance.
Right.
When I first started in the industry in '98, I sold a lot of variable universal life policies. That's what the company that I worked for.
I remember those. Yeah, sure.
We were trained, man, this is the best thing since sliced bread, Micah, you go out here. Well, 2000, 2001, 2002 hits, and all of this money, the excess over the term cost was all in the market.
Right, and it evaporated. Sure.
I had a lot of angry clients. I did not like that.
Yeah.
We do not set up any type of policies like this anymore because we don't have anything that is subject to risk. It's also important to understand, and we do annual reviews with each one of our policies, our policyholders, to make sure if they're having that off year, or I've got this great year, where can I put this money, those types of things, to keep that line of communication open so they don't get into a situation like you are thinking, well, I thought I was going to be good, and now all of a sudden I'm needing to dump all this extra money into this. Could something like that happen? Potentially, but most of the time having these ongoing conversations, they know if that problem's going to take place 6 months, 12 months in advance.
Yeah.
You can address it before it comes to a reactionary.
I'm sure I probably did too, but I got so many things on my mind, and this is just one, you know what I mean? It's just one thing of many. And so I think a lot of people don't really understand this insurance. There's no question in my mind. I bet you it's rare you run into a client that actually understands all this, truthfully.
Why it's so important. To keep in touch with the client, to constantly remind them, here's what you have.
Yeah.
If you take
That would be helpful.
Loan, here's what well, let me go back to 2008 and 9.
I could see that would be helpful.
In 2008 and 9, all of my clients were taking policy loans.
Mm-hmm.
And it was a couple of years before, they kind of
got back into the
track. And I said, it was almost like weekly policy reviews at that point. But I just reminded them, like I said, you've got a base premium that you
right
to pay to keep it in force. Let's pay some policy loan interest, but let's not worry about the policy loans or funding the cash value rider right now. And every single one of them kept their policies. Nobody lost their business. Nobody lost a house. So
it all worked out.
Whew.
Yeah.
Yeah, we all went through that.
So obviously there's lots of people that somebody can buy life insurance from. And you guys say you don't even really sell it. You just direct them to other people, or do you sell? Okay, so you do, but you're not married to any one client, company, insurance company. So you can basically sell whatever you want then. Is that right?
We just try and look at what the client needs, what their goals are, and, then we look at our carriers and just try and make the absolute best recommendation for them. And we don't have any, we don't care what the client wants to accomplish. We just want to help them get there. If you're 25 years old and you're just starting your business, we're going to put a term policy in place for you. Let's go back to your example of a guy that's 40 years old, 10 million in annual revenue, makes $1 million. Well, you might need a lot more life insurance than you think if you've got 10 million in revenue and 50 employees.
Right.
Let's see if we need to do a financed policy. Banks will finance large policies.
I found I hit the limit at one point. I think I had about 6 or 7 million, and I couldn't get any more because they said, well, you're worth more dead than you are alive. But my banks wanted it because I had about 19 or 20 million in debt out there. They wanted me to have everything I can get. So it was a problem.
We do get calls from local banks from time to time, or clients that they've, sent our direction.
Sure.
So, I'm of the school that you just can't have too much. If you have family, if you have charities that you love, that you want to bless on your way out the door, then.
Yeah. I think it goes into an aspect as well when talking to them about retirement planning from life insurance. So many business owners, I feel like, kind of neglect retirement. They're like, oh, I'm just going to sell the business one day, and that's
exactly
retirement.
That was always my thought process.
Absolutely.
Right.
And that can work.
Sure.
But then what happens, or we like to have our clients have a firm foundation, just like building a home or anything.
It's like, what if that doesn't work?
Exactly.
What else? What's your backup, right?
Exactly. And so this cash value life insurance can help fund their business, projects, equipment, whatever the growth that takes place, so forth. But then it also is that safety net there for them if something doesn't work out or the business fails, or, think about Blockbuster, for example.
Yeah, sure.
I mean, that started small and grew up, and then all of a sudden, Redbox,
it's gone,
and then streaming, and who would have ever? I would have never thought of something like that. Just as an example, so
the technology just totally wiped it out, basically. Yeah. So, what do you do if somebody wants to get a hold of you all? How would they do that?
They can go to our website.
Okay,
newcoursefinancial.com.
So how is that? NEWCOURSE financial.com. Okay, newcoursefinancial.com. All right.
And mine is Mika, a little different, MIKA at New Course Financial for the email. And Theresa's is with THERESA.
At newcoursefinancial.com. Newcoursefinancial.com. So how often do you talk to your clients? I mean, Theresa, you said like some of them you talk to weekly during bad times. I mean, what would I expect because I can tell you when I bought this policy I got, like whatever it was, a year ago or 2 years, I don't remember. I've never heard from the guy since I bought it. Not one single thing.
That's why our industry has such a bad reputation.
So
Such
that's
bad.
why I don't know whether
Yeah.
I have to pay this or not or anything at
There
this
should
point.
always be an annual policy review.
Mhm.
I mean, if you have a term policy, you're not gonna have a long conversation.
Right.
But when it comes time to convert that, that's gonna be a good conversation. But if you already have cash value in place, you should be talking to that client twice a year.
I never heard from anybody on my term policies either. I just get a notice in the mail that, by the way, it's gone from 800 a year to 9,000 plus or whatever. They just send me no communication whatsoever.
I think so.
Is that
much-
typical?
Well, I think it's common.
Mhm.
I think so many life insurance agents, if we want to kind of call it that, it's a transactional event that takes place.
Right.
Our big difference, I feel like, is we really try to make it more of a relational event that takes place because the young individual, like we've talked about,
Their needs change over
their
time.
needs change. We want to have
Yeah,
those
sure.
conversations. You got married, you have a child now,
Right.
you have, your business is growing. All of this, you've brought on a business partner, key man policy,
Right.
structure. I mean, all these different types of things. So even on the term side, we have a lot more, I feel like, contact with our clients. On our clients that have and understand, kind of like the engineer, he is referring business left and right because he gets it. He is asking, when can I do my next policy?
Well, he's demonstrated it works for him.
Right.
He's sold. He's now he's out there, as an evangelist for you.
He is, and he
Yeah.
wants to help his friends,
Sure.
and family
Yeah.
members, and all those types
Yeah.
of things. And so that's that ongoing and growing relationship that I feel like takes place with our clients versus that transactional event. I always have kidded people for years when I did, retirement planning and employee benefits and enrollment services and all of this. When I walked in and met with a small business owner, I said, can we put the shield down for a minute? Because I know that insurance agents are viewed as attorneys, used car salesmen, and the scum on the bottom of the pond. And I said, just give me a chance.
I don't know if it's that bad, but
It is sometimes. And so I always just tried to say, give me a chance to explain what we do differently, if that makes sense. And then you make an educated decision if this makes sense for you on there.
I have clients, husband and wife, and they have been with me since 2007. He passed away 2 years ago last week. And he had a very large life insurance policy that they bought multiple cars with and built their home from the cash values of that policy. And it was such a bittersweet day to deliver that check. But just knowing that she got a huge check, and I've never been bear hugged so hard in my life. And I cried like a baby because her husband was such a good man.
right.
But what I was able to deliver, when no one expected it, it was very sad.
Sure.
And their 3 grown children bear hugged me and thanked me.
Isn't that nice?
And so, I love dealing with the young folks, just trying to teach them. But I also know the hard part at the end sometime is coming. That's why I have a younger business partner, because someday I'm going to walk away.
I get it. No, I get it. I made that transition myself, so I understand. Yeah, I think as a business owner, my strategy always was to find people I trusted and just deal with them forever. Okay, I did that with accountants. I did it with different lawyers for different purposes. I did it with my health insurance provider. I don't want to have to switch horses all the time. I would rather have that long-term relationship of trust and mutual respect. And then there's no used car salesman thing going on. One last question for y'all. Sure. Do you look at the payment practices of the insurance companies that you deal with? I always think about that John Grisham book, I think it was The Client, where there was Great Benefit Life that just decided not to pay anybody for a year or two. We just don't pay any claims. And do you look at that with these insurance companies that you guys put people into, like how good they are about paying the benefits if needed?
Well, there's the ratings agencies. I mean,
Okay.
There's always
Are those
that.
good? Are they generally?
Yeah, they're spot
Okay.
on. But you have to look at things like how long have they been in business? All of the companies we deal with, most of them are mutual companies. They've been in business for well over 100 years.
Yeah.
But
Versus the fly-by-night that
Right.
cooked up in North Carolina 3 years ago or whatever.
But here's something that Mike and I pay close attention to. A lot of people aren't aware of. Where do banks put their money?
Mm-hmm.
They're using your money,
Right.
but where are the banks putting theirs? Well, there's a term in the Internal Revenue called BOLI, bank-owned life insurance,
Mm-hmm.
in the billions. Banks own cash value life insurance.
Okay. So you can look at the companies they put their money into and figure that's
Exactly.
pretty safe then.
Exactly.
Yeah, that makes sense.
I would also say, to tie in with that, we work with companies that go above and beyond what they have to. What I mean by that is in this life insurance industry, most companies are required to have $1.05 on reserve for every dollar that they would have
Sure.
to pay out. Most of the carriers we work with, especially a couple of the bigger ones that we really like and feel that are safe, have $5 and $7 on reserve for every dollar they would have to pay out. I'm not worried about them going under.
Yeah, no, that makes a lot of sense. So, well, that's good to know that you do think about that, because I see these ads for like auto insurance. It's like, I saved $812. My God. But who knows if the company is any good?
Right.
So if they fight every single claim, you didn't save anything. You know what I mean? It's not just a matter of the premium that people pay. It's the quality of what's behind it if they're actually going to pay off.
Yeah, I've had a great run with carriers. I've not had any claim. I haven't had a lot of claims, but not one of my clients' claims have ever been denied. Life insurance carriers they function a bit differently than health insurance carriers. And with life insurance carriers, you're dealing with the old conservatively run,
Well,
Actuarial number.
look at their books.
the
and
only
open
reason
it up.
I say this because my sister's husband died in 1985. He was a manager of a Merrill Lynch office, okay? Falls over dead at the age of 40 from a heart attack. And so it leaves her with two little kids. They were like 7 and 9. He had a life insurance policy that was less than 2 years old, that was his biggest term policy, that was not paid. And the reason was, when they did an inventory of his car, there was a cassette tape in the tape player from Alcoholics Anonymous. Now, he wasn't a drinker, okay? He'd never gone anywhere for treatment, but they said, you lied on your application that you have sought treatment. They considered the cassette tape treatment for alcohol addiction, and she was denied. Now, maybe she could have gotten a good lawyer, fought that, I don't know, but I'll never forget that. It really stuck in my head. They were looking for a reason not to pay that claim, to go to that level. So,
And I will say there are carriers out there that you have to beware of.
yeah.
We've got a client right now in South Arkansas that was, and this was an annuity, but at the same kind, it's still an insurance product.
Yeah.
Sold 8 years ago, and that company has changed and been bought out by 3 different companies. That is a red flag, and that's a train about to go off a cliff, in my opinion.
What can you do with it? Can you pull the money out of there and put it in something
We're
else?
moving to a more secure company.
Yeah.
For that. Yep,
Yeah.
absolutely. So.
'Cause I do think that's something a lot of people don't think about. They just look at the premium. It's just like, oh, it's cheaper. It's all the same thing. No, it's not.
Sometimes you get what you pay for.
Yeah. All right, guys. Well, listen, it's really been fun talking with you, and I hope our listeners have learned something today about insurance and how they can use this tool. And once again, newcoursefinancial.com is the place to find out more information. And for everybody else, we welcome your questions and comments at bigtalkaboutsmallbusiness.com, as well as any suggestions for future guests. We're always open to that. We don't take everybody, we need to make sure that you've got something to offer our listeners, but we'd love to hear from you. So thanks again. And this has been another episode of Big Talk about Small Business. I'm Mark Zweig, and I'll see you next week.